Welcome back to the Malaysian Money Matters show. It's the 18th of March, 2025. Get ready to dive into a sea of market movers, big deals, and maybe even a few surprises. It's been a roller coaster of a week for Malaysian companies. So let's unpack it together with our expert. What's the big picture here?
Well, it seems like amidst the global uncertainty, some Malaysian companies are really seizing opportunities. We've got acquisitions, expansion plans, and even some companies taking advantage of the global shift towards renewable energy.
All right, so let's start with Apex Securities. They've been making some interesting calls lately. What's their take on the current market landscape?
They're actually pretty optimistic about Malaysian stock valuations, especially after that recent dip. They say the market is trading at a discount compared to its historical average, suggesting a good time for savvy investors to consider buying the dip.
But isn't that a risky move, considering all the global instability we're seeing with the trade wars and recession fears?
It's definitely not for the faint of heart. Apex Securities themselves acknowledged the external risks and even lowered their year-end market target. But their recommendation is to focus on companies with solid fundamentals, particularly in sectors like REITs, utilities, and healthcare. Think of it like finding shelter in a storm. These sectors tend to be more resilient during economic downturns.
So they're saying focus on the safe bets,
Yeah.
for now at least. And they even gave us some specific companies to watch, right?
Right. They highlighted Sunway REIT Tenaga, National Malakoff Corporation, Westports Holdings, and KPJ Healthcare. These companies are known for their stability and consistent performance, which can be quite appealing when the market feels like a roller coaster.
Got it. So Akasha's buy-on-dips strategy focusing on the steady performers. Now, let's talk about CCK Consolidated Holdings. Public Investment Bank seems quite bullish on them, particularly their expansion in Indonesia. What's the story there?
CCK is a poultry firm, and they're building a massive new plant in Indonesia that will basically triple their production capacity. This is exciting for a couple of reasons. First, it positions them to tap into Indonesia's growing consumer market. Second, the new plant is closer to key raw materials, which should help them manage costs in the long run.
Smart move, especially with inflation being a concern globally.
Yeah.
But wouldn't minimum wage increases in both Malaysia and Indonesia potentially eat into their profits?
That's a valid point, and it's definitely something to watch. Higher wages mean higher costs for companies like CCK, but Public Investment Bank believes the boost in consumer spending from those wage increases will actually benefit CCK, especially their retail operations.
So it's a bit of a balancing act, increased costs, but potentially higher sales as well.
Yeah.
Now, another company that caught my eye is Kumpulan Kitacon. CGS International thinks they're seriously undervalued. What's their reasoning there?
Well, CGS International points to their surprisingly low price-to-earnings ratio compared to the industry average. They also highlight that Kumpulan Kitacon has wrapped up all its legacy projects, which means their profit margins are likely to improve moving forward.
So they're in a good financial position to capitalize on new opportunities.
Exactly. Plus, CGS International is impressed by their consistently strong balance sheet and their track record of winning new projects. It seems like they're set up for a good run.
It's like they've cleared the runway for takeoff. Now shifting gears to the world of acquisitions. Catcha Digital finally sealed the deal with Digital Symphony. That was a long time coming, wasn't it?
Over 2 years in the making, Catcha Digital acquired a majority stake in Digital Symphony, a digital marketing firm. It's an interesting deal because the payment is tied to Digital Symphony's profitability.
So they're incentivized to make sure the acquisition really performs. But what's the strategic play here for Catcha Digital?
It's all about expanding their digital marketing capabilities by bringing Digital Symphony into the fold. Catcha Digital gains access to their expertise and a wider network, and for Digital Symphony, it's a chance to leverage Catcha Digital's resources and reach.
A win-win if it plays out the way they're hoping now. Focus Point has been busy making moves to boost shareholder value. What's their strategy?
They've proposed a bonus share issue, a dividend reinvestment plan, and even a share grant plan for employees. It's a multi-pronged approach to incentivize both investors and their own team.
So they're giving shareholders more shares, letting them reinvest dividends for even more shares, and rewarding employees with shares too. It's like a share party. But what does it all mean for the average investor watching Focus Point?
Well, the bonus share issue could potentially make the shares more affordable for smaller investors. The dividend reinvestment plan helps those who want to compound their returns over time. And the share grant plan is aimed at aligning the interests of employees with the company's success. It's a pretty comprehensive approach.
Speaking of big moves, GDS Holdings is taking a bold step in Malaysia. They're seeking a record-breaking loan, aren't they?
A whopping US $3.4 billion loan. This is all for expanding their data center operations in Malaysia.
That's a huge investment. What does it tell us about Malaysia's role in the global tech landscape?
It really highlights Malaysia's growing importance in the data center market, especially with the AI boom driving demand for data storage and processing. GDS Holdings is clearly betting big on Malaysia becoming a key hub for this rapidly growing industry.
It's like Malaysia's becoming the data center capital of Southeast Asia.
Yeah.
Now, unfortunately, not all deals go as planned. Gentayu Sustainables had to hit the brakes on their big acquisition.
Yes, their planned acquisition of hydro assets in Sabah fell through. They couldn't secure a necessary extension from the Securities Commission, Malaysia, so the deal worth over RM 173 million had to be terminated.
That's a significant setback. What does it tell us about the regulatory landscape in Malaysia?
It's a good reminder that even when companies do their due diligence, regulatory hurdles can sometimes derail even the most promising deals. It's a complex process, and navigating those complexities is crucial for any company looking to make big moves in Malaysia.
Now let's talk about Pohuat Resources. They're a furniture maker, and their latest earnings report shows they're feeling the heat from the global economic slowdown.
Their Q1 net profit took a dip mainly due to higher costs and lower factory utilization in Vietnam. They're facing challenges on multiple fronts, from the trade wars to a softening U.S. housing market.
It sounds like they're getting squeezed from all sides, but are there any bright spots in their report?
Their revenue actually increased thanks to strong office furniture orders from their Malaysian operations, so it seems like there's still demand for their products even in this challenging environment.
So it's a mixed bag for Pohuat, wins in some areas, losses in others. Now Rojas Technic is shaking things up with a major divestment, right?
They're selling their stake in a Vietnamese water infrastructure subsidiary for a cool RM 87.14 million. It's a strategic move to streamline their operations and free up capital.
So they're cashing out to pursue new growth initiatives.
Exactly. By divesting a non-core asset, they're positioning themselves to be more agile and pursue opportunities that better align with their long-term strategy.
Smart move, especially in the volatile market now. Let's talk about Self-Kanban. They seem to be defying the odds and winning big in the infrastructure sector.
They've just snagged two major wastewater-related contracts worth almost RM 100 million. It shows there's still a strong demand for infrastructure projects in Malaysia, which is good news for companies like Salkin.
It's a positive sign for the Malaysian economy as a whole, right? Infrastructure spending is often seen as a way to stimulate growth and create jobs.
Absolutely. And finally, we have some fantastic news in the renewable energy space. SolarVest Holdings just won a massive contract for a 500 million solar farm.
That's a huge win. Tell us more about this landmark project.
It's the biggest solar farm project awarded under the LSS program in Malaysia, and it's a clear signal of Malaysia's commitment to transitioning towards a cleaner energy future.
So SolarVest is riding the green wave and making a big splash in the process. All right, that's a wrap on Malaysian company news, but we're just getting started. Stay tuned for part 2, where we'll delve into the international and political news that could impact Malaysian businesses and investors.
Now, let's zoom out a little bit and look at the bigger picture, the global scene, and how it's all connected to Malaysia.
Because what happens on the other side of the world can definitely impact us here at home.
Absolutely. And right now, all eyes are on the Bank of England. They're expected to hold interest rates steady this week, but, there are whispers of potential cuts later in the year.
Why the hesitation? Are they just waiting to see how things play out with all this trade war drama?
Exactly. They're walking a tightrope, trying to balance domestic economic concerns with the potential fallout from Trump's trade policies. It's like they're holding their breath, waiting to see which way the wind blows.
Speaking of those trade wars, it seems like South Korea's chip industry is taking a direct hit.
Their chip sales to China, which includes Hong Kong, plummeted by over 30% in February. It's a double whammy effect. The U.S. is tightening export restrictions on advanced chips to China, and at the same time, global demand for chips is cooling down.
So it's a mix of geopolitical maneuvering and market forces at play. But how does this all tie back to Malaysia?
Well, Malaysia is a key player in the semiconductor supply chain, so any disruptions to that global trade flow can have ripple effects here. It's a reminder that even if we're not directly involved in a trade conflict, we can still feel the tremors.
It's like a global game of Jenga. Pull the wrong piece out and the whole thing could wobble now amidst all this uncertainty. There is some good news coming out of emerging markets.
They're stepping up to fill the gap in palm oil demand, with major buyers like India and China cutting back. Emerging markets are absorbing more of the supply.
That's good news for Malaysia, one of the world's leading palm oil producers.
Indeed, it's a silver lining in what's otherwise a pretty cloudy global outlook.
And speaking of safe havens, gold is having a moment. Isn't it UBS Group just hiked their gold price target to a jaw-dropping US $3,200?
They're predicting a surge in demand for gold as a safe haven asset fueled by those ongoing trade tensions and a weakening U.S. economic outlook. When investors get nervous, they tend to flock to gold, which historically has held its value during times of turbulence.
It's like the ultimate financial comfort blanket. Now let's turn our attention to some political developments that could have implications for Malaysia. Petronas and the Sarawak government are in some interesting discussions regarding Petroleum Sarawak, also known as Petros.
The focus is on Petros's role as the state's gas aggregator, and there are concerns that this expanded role might create some uncertainty for investors, especially in the LNG sector.
So it's a balancing act, trying to assert regional control over resources while also maintaining a stable and attractive investment environment.
Exactly. It's a delicate dance, and it'll be interesting to see how it plays out. Meanwhile, on the international stage, Trump is showing no signs of backing down from his trade war. He's planning to impose even more tariffs despite the negative market reactions.
Is he doubling down on his America First agenda, even if it means risking global economic stability?
It certainly seems that way, and OECD has issued a stark warning that these tariffs, they say, will not only harm growth in Canada, Mexico, and the U.S., but they'll also fuel inflation globally. It's a lose-lose scenario.
It's like he's playing a high-stakes game of poker with the global economy, and no one's quite sure what hand he's holding now. Shifting gears to the ongoing conflict in Ukraine, there's a glimmer of hope on the horizon.
Trump and Putin are scheduled to speak this week about potentially ending the war. The talks will focus on a proposed 30-day ceasefire and possible concessions regarding land and power plants in Ukraine.
It's a complex situation, but any progress towards peace would be a welcome relief for the world.
Absolutely. Now, before we wrap up this part of our deep dive, there's one more trend worth noting. Foreign investors have been pulling out of Asian equities for 3 weeks straight.
That's not a good sign what's spooking them.
The U.S. trade war is a major factor. Investors are getting cold feet, worried about the potential economic fallout. They're shifting their money to safer havens like U.S. treasuries or, as we discussed earlier, gold.
So they're basically hitting the pause button on Asian markets until the dust settles.
Pretty much. And this exodus of foreign capital is something Malaysian companies need to pay close attention to, especially those that rely on foreign investment for growth.
It underscores the importance of diversifying funding sources and building resilience to those external shocks.
Right. But there is a silver lining. Local institutions have been steadily investing in domestic equities, providing a counterbalance to the foreign outflow.
That's encouraging to hear.
Yeah.
It shows confidence in the Malaysian market.
And retail investors are also holding steady, continuing to invest, albeit at a slower pace. This local support helps to stabilize the market and creates a more resilient investment environment.
So even with all the global turmoil, there's a sense of resilience and optimism here in Malaysia.
Indeed, it's a testament to the strength of our economy and the resourcefulness of our companies. Now, in part 3 of our deep dive, we'll explore what all this means for you. What strategies can you adopt to thrive in this ever-changing landscape?
All right, so we've covered a ton of ground here, from Malaysian companies making big moves to the global forces that are shaping the markets. But let's get down to brass tacks. What does it all mean for you, our listeners?
That's the question, isn't it? We've thrown a lot of information your way, and now it's time to kind of connect the dots. Think of this as your cheat sheet for navigating these turbulent times.
Okay, so let's start with the big picture. What are some key takeaways investors should keep in mind?
Well, if there's one lesson to learn from all this, it's the importance of diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes, different sectors, even different countries. It's like building a financial fortress that can withstand the storms.
So don't get caught with all your chips on one number, so to speak. Now, we talked about some promising sectors in Malaysia, like renewable energy and data centers. Are those areas investors should be paying extra attention to?
Absolutely. SolarVest's big win with that solar farm project is a clear signal that renewable energy is gaining momentum in Malaysia. And with GDS Holdings pouring billions into data centers, that's another area that's worth watching closely. These sectors are not just about riding the wave of the future, they're also potentially very profitable.
So for those looking for growth opportunities, those sectors might hold the key. But what about investors who are a bit more risk-averse? Are there any safe havens in the Malaysian market?
Don't forget about those steady performers we mentioned earlier. REITs, utilities, and healthcare. They may not have the sizzle of high-growth tech stocks, but they offer stability and consistent dividends, which can be incredibly valuable during times of uncertainty. Think of them as the anchors of your portfolio, keeping things steady while the rest of the market might be swinging wildly.
It's all about balance,
Yeah.
right? Having a mix of high growth and more stable investments. Now, we've talked a lot about the external factors influencing the Malaysian market. What about the internal political landscape? How can investors make sense of that?
Stay informed, pay close attention to what's happening in Putrajaya, government policies, regulatory changes. All of these things can impact your investments. It's not just about reading the financial news, it's about understanding the political context in which those financial decisions are being made.
So keep your finger on the pulse of Malaysian politics. It's all connected now. One of the recurring themes throughout this deep dive has been resilience, despite global headwinds. There's a sense that Malaysia is holding its own.
Absolutely. We've seen local institutions stepping in to support the market, and retail investors are continuing to invest. This domestic strength is a powerful force, especially when global sentiment might be wavering. It's a testament to the belief in Malaysia's long-term potential.
So even though the global economy might feel like a roller coaster right now, there's reason for optimism in Malaysia. But it's not just about sitting back and waiting for things to get better. It's about being informed, making smart choices, and maybe even finding some hidden opportunities amidst the chaos.
Exactly. This is where knowledge really is power. The more you understand about the forces at play, the better equipped you'll be to navigate the market and make decisions that are right for you.
And that's what we're all about here on the Malaysian Money Matters show, empowering you with the knowledge and insights you need to thrive in the Malaysian market.
So be sure to subscribe and join us every week as we break down the latest news and trends. We'll help you stay ahead of the curve and make informed investment decisions. Until next time, happy investing.
And that's a wrap for today's deep dive on the Malaysia Money Matters show. Thanks for tuning in. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.